big Black Friday, increased sales from 2021. Now, remember, we have big inflation. That's definitely driving up the nominal dollars spent out there. Mo's going to go over those numbers very quickly, but everybody's talking about a Santa Claus rally this year. That's a rally through the end of the year. Guys, when I look at these things, I don't pay any attention to that. And the reason being is there is no fundamental reason why there should be a rally through the end of the year. Yes, I know people might, if anything, I would argue that things would go down because people are selling stock for tax losses and all these things. But a rally through the end of the year, if you care about it, more power to you. I could not care less about a Santa Claus rally. What I care about is fundamentals in the company. I see a lot of analysts out there talking about where we're going to be next year on the S&P, where it should end up. Don't care. I literally could not care less. Revenue, profit margins are going to fluctuate over time. We are still on the tail end of a quote unquote growing economy. Margins are high. That's not going to be the case over the long term. Margins have to contract and go back to historical levels. So Mo, what do you have here on the in-person shopping increase 2.9%? That's in person, not online.
In person. Now, to go online, record of $9 billion spent during Black Friday, only on Black Friday, not through the weekend.
Okay.
So $5 billion in sales actually on Thanksgiving Day. And then today's Cyber Monday, so we'll see what's going to happen from here. But look at some of these numbers.
Now, Cyber Monday, like I was reading articles this weekend about Cyber Monday not being a big deal, or I buy things on Cyber Monday.
It's funny. I mean, you would think that companies that are based online would have better Cyber Monday sales than Black Friday sales.
You would think so.
You would think. But look at this. Online sales surged as much as 221% over an average day in October. Toys were another popular area of 285% increase. This is over last year. Exercise equipment, 218%. Buy now, pay later increased 78%.
Oof.
Yeah.
So guys, listen to that. Buy now, pay later increased 78%.
And up 81% over that same period last year. So
buy now, pay later. To me, that is an indication that people don't have the money to spend.
But they're still spending.
An increase of 78%. Oh boy. Now, I also read that Best Buy announced that they had a much bigger increase on people spending on credit cards versus debit cards this year versus last year.
That, again, it goes right in line.
Now,
Cyber Monday is expected to do $11.2 billion, so we'll see what happens.
Up 5.1% year over year.
We'll see what happens tomorrow.
For today.
We'll see what happens when the number comes out tomorrow.
Great. So, back to the Santa Claus rally. Mo, what's your take on the Santa Claus rally stuff? Like, exactly.
It's stupid. I mean, you could have a Santa Claus rally, and then if it goes down, they'll say Santa Claus didn't show up this year. It's like, oh, okay, cool. Doesn't change anything for me.
Now, remember, I do believe in looking at history to be a good indicator of the future. But it's when the history has a fundamental process involved. For example, if you told me, Paul, this company is going to increase its revenue and profit by 100% over the next 5 years, and it's selling for a reasonable price, where do you think the stock is going to go? Well, it should go up about 100% because it makes sense that the company's value is driven by revenue, profit, cash flow, etc. But when it comes to a Santa Claus rally,
this is the same thing as when you're trying to predict the Santa Claus rally and you're saying, well, if the Phillies win the World Series this year, the stock market's going to crash.
It's the whole point I think Mo's trying to make, which he's right on, is these are just cute things. Like, to me, I would have thought at the end of the year, stocks would go down. Why? Because people want to get their losses in to offset their gains, etc. Right? And by the way, for those of you who've watched our channel, we have a video coming out this week about my Alibaba tax loss harvest. It is completed today. I will let you know how it went and my repurchase back of Alibaba after selling it for a tax loss harvest to get Baidu. So if you're new to the channel, definitely subscribe, because these are good things that we do that show exactly how I'm investing my money. And the Baba, it worked out beautifully.
It was incredible.
It's actually, Baidu's up today higher than Alibaba, so I might even get,
oh wow, you get a little bonus.
Anyhow, you've got to subscribe to the channel and watch these videos because it's wonderful stuff. So, guys, to me, we have lots of data points out there. There's so many data points in this world about the economy, about retail, etc. The big indicators to me are if people are spending, if sales on buy now, pay later are up 78 and 81%. That's scary.
It is.
We have good numbers on the economy, but you still sit there and say, okay, I'm not going to make a prediction on, have we been in a recession? Are we in a recession? Remember, we've still seen nominal GDP growth not real GDP at the beginning of the year, but nominal GDP growth grew a ton in the last year because of inflation. Inflation, nothing in this world is ever good or bad in and of itself. There are pluses and minuses to everything. So inflation is bad because people out there are spending more for getting the exact same goods, and their incomes may not have already recovered to pay for that. The plus side is you see all these numbers growing. Like, to see online sales up a lot, great. But how much of those are because of nominal prices going up because of inflation? I don't know. That's where the data is going to come in at some point, because these data numbers are not adjusted for inflation.
No, they're not. They just look pretty good because inflation. Correct.
So you sit there and say, okay, wait. Like, if you just looked at nominal GDP, you'd sit there and say, oh my God, we're growing a ton. Look at our nominal GDP. It's up, 10%. Well, yeah, but factor in inflation, you're up a lot less. So these are the things to consider. Okay. Now, in terms of what else we have to talk about here.
I will say this.
Yeah.
When it comes to Santa Claus Rally or no Santa Claus Rally, this is a great opportunity to trade, because no matter which direction it goes, you're going to make money. That's the great thing about it. I wouldn't go and value invest based on a Santa Claus.
So remember, guys, what Mo's talking about here is trading, not investing. And for those of you out there who think that reading a chart is investing, it is not. It is not investing. Mo's talking about trading, which in part of our community, he teaches trading based on charts, which I love doing: swing trading, long-term trading, day trading, etc. But this is what he's talking about. You can make money on the up and down, regardless of what the underlying fundamentals of the company are.
I don't care. Yeah.
We do Bitcoin.
Yeah, exactly.
We don't care what the asset is. What we care about is the movement in the charts. And that's what Mo's talking about here through the end of the year. With volatility, it's a way to make good money both up and down.
And today I'm posting to the Oracles of EM my Christmas list, my Santa stuffers list. So it's just stocks that a lot of retail that I see moving up or down. It doesn't matter the direction. I mean, Ralph Lauren, it's usually a little bit volatile.
It's Ralph Lauren, Mo.
Lauren?
It's Ralph Lauren.
I think it's French.
No, it's Ralph Lauren.
All right. Well, I put accents over E. So.
Hey, the guy's from New York.
I'm fancier than
There's
you.
a story about a girl who wrote him a letter saying, hey, he said it's pronounced Lauren, like
really?
the name. Yeah.
I didn't know that.
By the way, Lisa corrected me this one. I told her she was wrong, and we looked it up. I was like, son of a bitch.
Yeah. But companies like Lululemon, just so many companies you have a lot of volatility on. It's a great opportunity.
So that's what we want to accentuate here.
You should care about.
Yes, you should look for these short-term price movements on the downside as an opportunity to reevaluate the company and decide, do I want to own the company right now? But remember, your outlook should be long-term, 7, 10, 20 years. If you can't reasonably predict how much money the company can make and have a proper margin of safety on that, why are you wasting your time investing in it long-term?
Yep.
Now, there are multiple ways to make money. I repeat, long-term trading of weeks or months at a time, swing trading of weeks or months at a time, or day trading minutes at a time. Totally different process, and we love them both. But don't confuse one for the other. Trading in charts is not the same as investing. That moron, Jim Cramer, Bo, correct me on his name. Jim Crater. He was a trader in his fund. He was not a fundamental investor. That's why you should not listen to him when it comes to his show and his decisions on the future. He is a moron. We can separate the two. We can understand there's a way to make money in both ways. Now, with the Santa Claus Rally, focus on the charts. Go look at the charts. Do not think that a 1 or 2% decline or increase means we're back. We still believe fundamentally that this market has a lot more to go on the downside. I think we're going to be testing those lows, but guess what? As fundamentals got better over the years, my value in the market has increased. At one point, I was as low as 1,300 or 1,500 in the S&P 5 years ago, but fundamentals have gotten better. I now believe that the fundamental value on the S&P is low 2000s. So it's way higher than it was before. Why? Because fundamentals got better. Fundamentals drive my decisions. And my goal is to buy when the price of the investment is much lower than the fundamentals say it should be in the long run. That is it. If that makes sense to you, please subscribe to the channel. Please listen. If you hate the noise out there on the day-to-day things, subscribe to the channel. Continue listening, because we talk about these all the time. It's so simple and straightforward, but in the investing world, for some reason, everyone is obsessed with doing something at all times.
Oh, yep, exactly.
But yet the best investors ever do the best because they're fine waiting and sitting in cash. I was in Turks this week, and I feel really bad bringing this up because I think one of the people watches the channel, But there was a great guy on the trip with us, a new person on the trip, very successful, wealthy man. And his criticism of Warren Buffett was, well, look how bad an investor he is. Look how much cash he's sitting on. That just shows what a bad investor he is. And I literally went like this.
Yeah.
And I was like, no, that to me shows me exactly what a great investor he is.
Yeah.
But the exact same data, the exact same fact, and we both perceived it different ways.
Mm-hmm. Yeah.
So guys, go ahead.
I was listening to a lecture by Monish Pabrai, and he was saying that the best investors are the ones that can sit patiently. And if you need to if you're that person that needs to go do stuff at all times, go and trade.
Yeah.
Go and do options. Go and do anything else. Even if you have, let's say you have $1 million portfolio and you want to trade $50,000. It's not going to change anything, but it's going to keep you active and it's going to be fun and it's going to just make you.
It's going to distract you from making bad decisions.
Going investing in these crazy things and putting $500,000 in something you have no business doing, but you're really bored.
By the way, not even 500,000, even 50,000. That's still too much money
true.
to put into something that you don't understand.
Yeah.
So guys, I'm going to repeat it till I'm blue in the face. Subscribe to the channel. Thank you very much. Enjoy your day. There are 3 things that you absolutely need in order to be a successful investor: the proper mindset, the proper emotion, and the proper process. Which ones are the most important?